Welcome to the final market recap of the term. COVID, the gift that keeps on giving. Slated to end on the 28th of August, Sydney's lockdown has been extended by another 4 weeks, with a bonus sprinkle of extra restrictions on certain councils in the Parramatta region. Queensland has also now been sent into a 3-day snap lockdown, lasting from July the 31st to August the 3rd, after 6 local cases were recorded. Safe to say those anti-lockdown protests were helpful. Year 12 students, however, have been made an exception, returning to in-person classes on August the 16th. Pfizer vaccines are also being made available for students who live in hotspot areas. However, with the country's Pfizer shortage, these doses are coming from a supply originally marked for the rural community. To soften the blow, additional government support has also been announced. Business support grants are now eligible for turnovers less than $250 million versus the previous criteria of below $50 million. With the end of lockdown drifting even further away, there's sure to be an impact on the economy. The Treasury estimates a loss of $1.3 billion per week in lockdown, while the Commonwealth Bank predicts employment within New South Wales will fall by 300,000, with the effect centred around Greater Sydney. At this point, we're watching a recession looming on the horizon, with Federal Treasurer Josh Frydenberg acknowledging the possibility of a repeat of last year's recession. Iron ore trade has seen some explosive highs recently. However, China has long been trying to shake off its reliance on Australian iron ore and is likely going to succeed in the near future. This is due to heavy investments into their own mining industry and the tightening of lending to property and infrastructure sectors, which make up 70% of China's total iron ore demand, as well as regulations on their own exports of materials such as steel in order to lower prices at home. The rest of the world has also been trying to recover from COVID, and the Eurozone, a bloc of states from the European Union, has seen their economy grow by 2% collectively, taking them out of a double-dip recession. All 19 countries reported a growth in economy, with Italy and Spain reporting a 3% growth after being heavily impacted by COVID. It'd be criminal not to have mention of the Olympic Games, as well as Australia's 14 gold medals. Not bad, right? However, with news that Brisbane has won the bid to host the 2032 Olympic Games, it's interesting to note that the Olympics has in recent times become known as an economic hole, with the Tokyo Games estimated to cost Japan $15.4 billion as well as an additional $2.8 billion due to delays. And that's the end of your market recap. See you next time.